RBS, Royal Bank of Scotland, or a rotten bank for small businesses? Damning new evidence that RBS penalised distressed firms to make money for itself, ignored warnings of potential conflicts of interest, and mistreated healthy businesses.
But there's nothing worse when you know that you it sounds really arrogant, you know you're good at what you do. This was 35 years of my life, and I knew I'd got it right.
We'll hear what the bank did and what we should do in return. Also tonight, we're leaving the EU partly to restore power to our own great parliament. So should our parliament not be allowed some say in exactly how we leave? It's a new battle in the Brexit war. We'll debate the pros and cons. And it's not been a good week for clowns. Donald Trump has had his troubles too. But did the debate save his campaign?
If I win, I am going to instruct my Attorney General to get a special prosecutor to look into your situation, because there has never been so many lies, so much deception. There has never been anything like it.
Republican P.J. O'Rourke tells us why he is voting for Hillary.
To my mind, she's wrong about everything, but she's wrong within the normal parameters of wrong. And it's a kind of wrong we've had before. It's a wrong we can endure, and a wrong we can recur. With him, who knows?
Hello, you don't need to get bogged down in the details of the RBS story. It is quite simple. RBS lent money to lots of businesses. That's what banks do. Some of them had problems, maybe minor, maybe major. That's life. But then a cash-strapped RBS decided to use business distress as a way of making money. It would pretend it was there to help the firms. It would put them into special measures in its supposedly supportive turnaround unit called GRG. And then in some cases it fleeced them, tipping them from a bad state to worse. Well, RBS even appeared willing to force perfectly sound companies into those special measures. Now, these allegations are not new, but Newsnight and the news service BuzzFeed have obtained a cache of interesting documents the bank didn't want the public to see. Andrew Verity has been through them.
It has been another extraordinary day of fast-moving developments for Britain's financial world. So, with an economy teetering on the edge of recession and a squeeze on other government spending, where is all the money coming from?
2008. Over-borrowed, over-lent and bailed out, RBS was under pressure from its shocked new owner, the government, to get bad debts off the books and boost its depleted cash. A fair goal, perhaps, but it was accused of using foul means to achieve it, looking for ways to trip up business customers so it could drain them of cash and get their assets on the cheap, with a disregard for the owners who created them. RBS furiously denied it. But now there's evidence. These highly sensitive RBS documents were leaked by a whistleblower, prompting an investigation by BuzzFeed News and BBC Newsnight. They contain secret information and internal emails showing that while one part of the bank was claiming to help business customers, another part of the bank was closely collaborating with it, looking to buy up customers' property when they got into trouble and extract maximum economic value.
Oh, God. Sorry.
What I've always held on to is that I know what I'm doing.
In what one email described as a dash for cash, RBS commercial bank staff could boost their bonuses by scouring their loan books for defaulting customers. Even if they'd never missed a payment, the bank had ways of finding them in default.
Imagine your mortgage lender telling you it's revalued your property, the price has dropped and it's now worth too little compared to your loan. Even though you may never have missed a payment, it wants its mortgage money back. Then later you find out that all along it had a property division that wanted to buy your property for a gain. That wouldn't happen with residential mortgages. They're regulated.
But it's very much like what happened to many business customers.
This was the old tobacconist shop.
Andy Gibbs is an architect and entrepreneur who spied an opportunity to regenerate a drug-ridden red light district in Norwich, then made his dream real, designing and building a thriving, profitable hub for creative companies.
A lot of my work is giving a handrail to the past.
In May 2008, RBS missold him a financial product supposed to protect against rising interest rates. When rates fell, it started draining cash from his business. The bank's response to his business trouble was to put it in what it said was a turnaround division, the Global Restructuring Group, or GRG. Then he was told the bank had revalued his property. It was now worth too little compared to his loan.
Tell us about the fees and the interest rates.
At one stage, I found out that they'd cancelled my professional indemnity insurance premium, which I have to have and could have damaged me professionally. Fortunately, I managed to hook that up without any gap of time. They started to cancel energy bills, small energy bills. The smallest one was something like £6.53, or telecoms. It was all the time taking away the control of what I had. It was a very beautiful and energetic business, really.
Andy was warned he may have to sell assets or go into insolvency, so he raised more than £500,000 selling the family home.
That money was swallowed up by our GRG, and it did not change any course of action whatsoever for a 10-month period.
So £500,000 was wasted?
537,000 really, yeah, £550,000 completely wasted, and the family home gone.
GRG wrote demanding repayment of its loan. But they'd continue to support his business if he sold a stake in his business to West Register, the bank's own property company. He declined, and within days the bank called in the receivers. He and his staff were thrown out. Andy lost his business, then his health, then his marriage.
I'd had a breakdown. At one point, I'd lost 4.5 stone in hospital, and I didn't actually know when I was going to get out of hospital.
What, for you, was the GRG treatment?
Sorry, oh God, sorry. What I've always held on to is that I know what I'm doing.
RBS says it's winding down GRG, but aggrieved business customers are now clubbing together to try and sue the bank.
I've spoken to a lot of people and I've heard a lot of stories, and I can hear within them a great repetition of the same kinds of activities and actions. And these are very unsavoury. These are not the behaviour of a normal banking process to deal with customers in stress. These appear to be the activities of an organisation trying to acquire the assets of people who otherwise seem to have a perfectly solid business.
The bank's claimed for years GRG was an intensive care unit to help stricken businesses recover. But the documents show that you didn't even have to be distressed. Falling out with the bank, or just wanting to leave and bank elsewhere, could mean a referral to GRG.
I've not seen one case where the evidence points to the fact they were artificially distressed to transfer to GRG. It simply isn't true.
But they could be put in there without being distressed, couldn't they? Just because of a breakdown in relationship with the bank?
No, there are a whole range of factors that point to financial distress.
In one email between bank staff, they discussed provoking a default event for a customer.
Okay,
all businesses that were transferred to GRG were in financial difficulty.
Well, that's contradicted somewhat by an email that I've got here. I wonder if you'd be good enough to look at it, because it might enlighten you as to your own bank's practices. It refers to, if necessary, we could provoke a default event. I've highlighted it there for you. And this is in relation to a GRG customer. Provoke a default event. Doesn't that suggest that GRG was engineering defaults?
No, look, I've spent 2.5 years looking at all the cases in terms of GRG.
You don't seem to want to look at this.
And I know what your document says.
You've seen the email talking about provoking a default.
But I'm really clear.
Doesn't that bother you?
I'm really clear, if you let me finish my answer. I'm really clear in all the evidence I've seen over 2.5 years, looking at millions of documents, there was no artificial distressing of businesses to put them to GRG.
Alison Loveday, a litigation lawyer, says RBS goes to great lengths to stifle customers' claims of wrongdoing.
they were a necessary victim, if you like. That's, I think, how the bank saw it. I think they knew that most business owners wouldn't have either the sort of mental resilience or the finance to be able to challenge them, and they were typically acting alone. So, you know, it took quite a long time for people to realise that they weren't the only ones that had been treated like that.
Why would the bank behave this way? Well, it could charge customers in its turnaround division much higher interest and fees. Much of the debt could be written off with the taxpayer supporting the bank. And crucially, capital held against the risk that the loan went bad could be released because it already had gone bad. And then there was what the bank called its upside. If it could take a stake in the business or some of its property, then when the market bounced back, there should be big gains.
The Financial Conduct Authority ordered a report by 2 firms of consultants checking out the allegations of mistreatment. Nearly 3 years later, it's completed and with the FCA. But the regulator won't say when it will be published.
Andrew Verity there. Well, with me now is Andy Keats, former RBS customer who, like Andy in the film, has had problems with the bank. Also here's Sir Vince Cable, former business secretary, with responsibility for overseeing the regulation of banks after 2010. Can I start with you, Andy, because you actually represent many of the victims of what we've seen described there, the SME alliances. You're involved with that. How many of the businesses that were dragged into this GRG group, how many of them were fundamentally bad businesses, had actually got into trouble or needed help?
As you say, I deal with hundreds. We support and investigate hundreds of businesses. And I'm one of those businesses myself. And it really annoys me, actually, to hear RBS saying what they've just said, that...
They're saying no one was made a distressed business that wasn't a distressed business. Now, is that...
I can tell you categorically that I've dealt with literally tens of businesses myself, investigated them and found that they were honest, proper businesses, properly run, with no defaults, no distress, and they were put into GRG, just like me.
Right. Now, your case is a sort of interesting one, because you weren't put into GRG.
I was put into a version of GRG called the ICE, the Intensive Care Exposure Committee, and I didn't even realise for 5 years that I was in it.
And you say that's because you said you were selling your business and it was going to move, the account was moving to Barclays, and then they started cutting up rough, basically.
We told them we were moving to Barclays, and 4 weeks later we had our merchant account terminated with 30 days notice, and they said that we were financially distressed. We were moving to Barclays. Why would they say that? And and 14 days before that, we'd had an offer for the purchase of the business after 4 months of due diligence. And so what was going on?
And you lost that offer, and you lost the move to Barclays, because Barclays said, hang on, RBS has obviously found something dodgy here. And so Barclays didn't give you the account. And then this has got caught up into your personal life as opposed to your business life, because obviously they're trying to repossess your house.
Well, what they did in the business, they then took all my money. So they retained all of my business money until we went bust. After we went bust, I unfortunately had a mortgage with RBS, and said to them, what do you want me to do? Do you want me to sell? And they actually told me no, they didn't want me to do that. They wait until later down the line. We entered into more borrowing facilities on the basis that I was a good customer.
We've got so little time, but I'm going to hope. But basically, it ended up with them saying, we're not. We're claiming money back from you, and we need to repossess
it ended up with them saying I was in arrears of nearly £50,000 when I was actually in borrowing facilities.
OK. So Vince Cable, they've obviously been playing quite a sort of rough game with a lot of small businesses. What do you see today that you didn't know when you were business secretary?
Well, I discovered, I mean, partly through lots of individual cases, but partly as a result of a report that was done by somebody called Lawrence Tomlinson, who I'd appointed as an entrepreneur in residence. He collected a lot of case material, which was exactly of the kind you've just heard and is corroborated in your report. And the problem we had was that there wasn't a kind of smoking gun. There were a lot of people who'd been shot, but we couldn't see the evidence within the bank itself. I asked the bank to investigate this properly. They called in Clifford Chance, who, as far as I know, did a fairly professional job, but they didn't have access to the material you've now got. More crucially, I asked the regulator, the Financial Conduct Authority, to do a proper investigation, and they should have published last year, but they haven't.
Right. Well, I mean, it's a bit worse than that, because I think they started the report back in the third quarter, at the end of 2013.
Yeah, that's when
and they said it would be ready in the third quarter of 2014.
Yeah.
I think we're now in the third quarter of 2016.
Yeah.
What is going on?
Well, you could conspiracy theories or just inefficiency. I don't know. I mean, they would argue.
What would the conspiracy theory be?
Well, they're covering tracks from just lack of proper investigation.
Why would they cover the tracks?
I don't
of RBS?
know. I mean, from my point of view, I was the minister who asked them to investigate. I'm very, very disappointed that they haven't published it. Why they haven't published it, I don't know.
But looking at the documents which we've now got, they to you look like the smoking gun because they look like the conversations going on internally.
Yes, well, that's what we lacked before. There were a lot of people who had been damaged. There was a lot of circumstantial evidence that the bank were profiting from these activities. But the Clifford Chance, the other people who looked at it, had hitherto said, well, there's bad practice, but there's no evidence it's been done systematically. Now, this evidence you've acquired suggests that it may well have been systematic.
Right. Now, it is possible the bank would say, we are just all people who are not quite understanding the game they're in there. They're trying to retrieve money for a taxpayer, incidentally, as we own 3/4 of the bank. Businesses that are in trouble are probably making the money in the fees and interest rates they're getting when they're in GRG, but are losing the money on the fact they're writing off chunks of their loan. And they are entitled to say, we're going to play hardball and we're going to get everything we can out of those
Yes, well,
companies.
we're talking about events primarily in the aftermath of the financial crisis. There's been a long time lag. And you're right that they were acting in the interests of the taxpayer. And even if they're found at fault, they will be fined and we, the taxpayer, will have to pay the fine. It's a ludicrous circular situation. But the fact is about 12,000 companies may well have been adversely affected. Many of the people have been ruined. Their marriages and mental health have been affected. And I think when it's happened on that scale, we can't just let this matter drop.
OK. Gents, thanks both very much indeed. Thanks.
Thank you.